Hello and welcome to another episode of the Real Estate Investing Club, the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items to cover. First, if you like the episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running. Second, if you are a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, we created an ebook for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All we charge is our admin cost to keep the show running. So, if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says Get the ebook to grab yourself a copy today. So with that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. All right. Welcome back to another episode of the Real Estate Investing Club. Today we have with us Ryan Gibson. Ryan is the Chief Investment Officer and co-founder of Spartan Investment Group. He is responsible for investor relations and capital raises for projects and has coordinated over $50 million in private capital. Spartan has grown to 35 full-time employees with over $130 million in projects under management and handles the acquisition, syndication, property asset management, and construction of its self-storage facilities. They are also a local Washington company, which makes me super excited because us Washingtonians got to stick together. So, Ryan, thank you for hopping on the show today. How are you?
Good. Thanks for having me, Gabe.
Absolutely. I told you before we hopped on here, we always start with stories. So why don't you take us back to the beginning? How'd you get started in real estate?
Yeah, so kind of the main, dabbling in real estate. I did pilot crash pads, but really the main start of Spartan and the journey that we're on now happened in Washington, D.C. when I met my neighbor, and my neighbor had a few businesses that he started prior, but we really hit it off and started Spartan. That was flipping houses and building condos, and quickly wanted to get into self-storage because of its recession-resistant status during the last two downturns. It was the least foreclosed upon asset class. And then we went to what scales the best. So the 3 E's, easy to own, easy to evict, easy to maintain, because we wanted to build a company, not necessarily just do deals. So that's kind of where it started. Alaska Airlines, I was a pilot for Alaska Airlines for a bit, and that moved me out to Seattle. Scott, my business partner, moved to Denver for a number of different reasons. And so we actually have an office in Westlake in Seattle, and we have an office in Golden. Golden is our primary headquarters, and there's about there's 18 people there now in the headquarters office, which is cool. And there's about 3 of us right now in Seattle. Actually, 4. We just hired somebody to do acquisitions out here in the Washington market. So to focus deep on Washington. So that's how it got started. Started raising money, learned about syndication, learned about, we had a bit of background in development. That's kind of our core competency, to do development stuff, and just really good stewards of running a business and growing teams. And my business partner is really good at strategy and building good culture and organizations. And that kind of, those things together have really just made it something cool. So.
Yeah, I love it. And it is, I mean, it's so important to have synergies when it comes to, the leadership team and then just your company in general. That's really cool though. So you moved to DC and you just saw you and your neighbor just hit it off and you're like, let's do this. We're making a real estate company.
Literally the guy 16 feet from my house. Yeah. In DC, everything's, attached row houses.
Yeah.
So yeah, we bumped into each other when I was checking the mail, and he ended up buying the house 2 doors down, and then we ended up kind of fostering a relationship over time. And then we're like, hey, we should start a business. So it was interesting, I didn't have the things to do, I never really wanted to do something by myself. And then, Scott had, gone through a couple of different organizational startups. And, it was like I had everything that he didn't, he had everything that I didn't have. So it was like this perfect, kind of combination of skill sets that really sparked, the success that we have today. So that was really cool that it just happened so serendipitously, like in front of our houses, So.
Yeah, it's funny how life works sometimes. It's just the most random encounters turn out to be one of the biggest things. I mean, you're sitting in front of an Inc. 500 banner, so I know you guys are growing pretty quickly.
Yeah, we were the 8th fastest growing private real estate company in 2020 and in the United States. And then we made the Inc. 500. And we were the 308th fastest growing real estate company. I think we had like a 1,400%, I think that's what it was, 1,400% revenue increase, over a period of time. And this year, so for 2021, I think it's up to 2,500% revenue increase. Yeah, so it's really just accelerating. Every year it just gets bigger and bigger. And we're doing more and more really cool projects. And what's great is we're building the team to do it. So we've got, almost 50 employees now. So we can fund a deal with private equity. So we have investors. We have about 2,500 or so investors on our list. We can do it. Investors have the option to do debt or equity, which is really neat. They get usually a security. They get a first position. They get great interest and usually a point to close, with a personal guarantee and a promissory note. So I think we're kind of unique there, from a kind of a scalability of lending. And then we do the equity. So if the investors want to own the projects, they can invest alongside us and, get a little bit more upside potential there. And then we do everything. So we are the general contractor. We build the projects. We do the property management. So we'll take a project through really difficult entitlements and build it, so we'll be the contractor that builds it, and then we'll be the soft, permitting, and then we'll property manage it. And in a lot of cases, we'll see it all the way through disposition. And we're doing that at scale, which I think is what's unique about us. We're doing, our construction spend is about $250,000 a day. So we're doing quite a bit of ground up development and, building projects across 5 states. 6 states actually now. So we're doing, ground up kind of everywhere with storage. So,
yeah. And in order to get that scale, I mean, you need to build a business. You're not just talking about, I mean, we mentioned it before we got on this podcast. You guys aren't just doing deals, and there's no shame in just doing deals. It's a lot of fun to do deals, but you're growing a business, you're building out the systems. So there's a lot of different directions we can take this right now. The thing that really caught my mind, you said you had 2,500 investors. So you guys are really good at raising capital. You're really good at getting the finances in order to make these visions that you have for the properties that you find a reality. So kind of take us through, let's go through a few of your processes, starting off with raising capital. Like, what do you guys do? What is the linchpin to that process for you? Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Yeah, so it really, what we do is, Scott and I are excellent communicators, and we understand very well what kind of experience somebody wants to have. So we talk about like the CX, or the customer experience, the journey that an investor takes in the process and the touch points that investor should have so that they have a good experience. We both come from backgrounds in sales, and we understand what makes good sales, and that's what you're doing. You're providing a solution to somebody, right? So somebody wants to be in real estate. They don't want to be active. They want to be passive, but they want to know what's going on. Or maybe they don't want to know what's going on, but they want to check in, right? They want to know, and then they want to know, how is it doing versus what we thought it was going to do. And then they want to make sure that there's a ton of clarity, right? So when they invest in a project, they, a confused mind says no. So we want to make sure that when we put an offering in front of somebody, they clearly understand what they're getting into and the risks. And I think the more upfront you are with people that this is a risky investment, the more it builds trust. And then you can kind of say, like, remember we talked about that being a risk, and well, this is how we're dealing with it. And then the last thing is capable team. If you're a one-man band and trying to do all this stuff yourself, that's okay. Everybody starts there. I also think that, if I'm investing with somebody, I'm investing in that person, sure, but then I'm also kind of investing in their company. So even though it's a deal specific investment, unlike a REIT, you invest with a REIT, you're not buying any real estate when you invest with a REIT, you're buying that company, right? It's kind of like Coca-Cola, if you buy shares in Coca-Cola, you're not buying Coca-Cola, right? You're buying parts of Coca-Cola, that, the company, right? So like when you invest in real estate, you're investing in a project, right? So you need to know that company has the capability to handle that asset. So, we built out a team of people that can handle all aspects. So it's really helped us, if somebody has a question about, hey, how's the property doing? How's the occupancy? What's the feeling in the market? I can turn to our property management team because we directly control that. I can turn to my construction manager. We can be more efficient with things. I'm more integrated into the operation that way. But I want to get into some specifics, okay, so what do you guys do, right? Yep. Number one, we communicate systematically, programmatically every month on the first of every month. So every month there's a communication that goes out to our investors. Good, bad, or indifferent, we share the entire portfolio. So if you invest in one project or 10 projects, you're going to know exactly what our portfolio is doing. Your investment is only going to be based on that one project. We do a deal by deal project level, but every month you're going to get a communication. Communication is going to have things like occupancy, value creation to date, and what we're planning on doing in the future, and kind of what the project was when we closed, right? That's kind of the basics of it. Sometimes it comes with a video, sometimes it might have pictures, just depends on what we get to for that specific asset in that past 30 days. Every month, 5 a.m., first of the month, doesn't matter what's going on in your life, that goes out every month, right? So the investors know that that's coming every month. The next thing we do is on a quarterly basis, we send financials. Financials are not a P&L and a balance sheet, not what's in the bank account. It's a pro forma versus actual for the quarter, okay, and all trailing history. So we show revenue, expense, net NOI, and distribution. So the investor in 25 seconds can look at our financials and know pro forma versus actual immediately. They can see, okay, this asset's doing better or worse than what we thought, what we projected, right? And a little bit of a story. We also give them a financial statement. So imagine, you go to Schwab or T. Rowe Price and you go online and you pull a statement, you can see exactly how your asset's been performing or your portfolio. We have that as well. So we give them a statement and we tell them where all their money is, what project it's in, what their returns to date are, all that stuff. And we do that. We have an investor management software that we use for that. So quite a lot of communication. The third thing that we do is we do a conference call. So think of this as like an earnings call. Now we're overseeing, I think, 20 syndications right now, 20 different, projects. So, we used to do it project by project, but we don't really have time to do that now. And neither do the investors that have invested in 15 projects. I mean, they'd be on calls all day long, right? So we basically are like, because a lot of our investors, they're just doing 100,000 in every deal, every deal that comes out, 100,000, 100,000, 100,000, 100,000. So they're kind of in every deal. So we used to do like a call for every deal. And we quickly realized like, okay, these calls are only taking 10 minutes. And then, there's a gap of 20. And then now the investor's waiting for the next call and they got to burn up their whole afternoon. So we do a company-wide call. And this is really neat. I don't think any other syndication company is doing this. we do a state of the union every quarter. So like who we've hired, what's going on at corporate, big wins for the quarter. We kind of make them like a Spartan investor, even though they're not investing in Spartan Investment Group, they're investing in what we do. So we have kind of a state of the union, what's going on at our company. And then we do a high level 5-minute, like, okay, let's talk about this project. This is what's going on. This is what we're doing. This is what we're concerned about. This is what's going well. And we go project by project. So that's our communication strategy. We share that communication strategy in a pamphlet, a brochure that we say, this is what we're committed to. We also put it in the operating agreement. So if it's in the operating agreement, it's in writing that we're going to do that communication, because syndications are great and real estate investing is great, but if you're doing it passively, it's illiquid. Real estate's an illiquid investment. It's not like T Rowe or whatever. You have a market reaction, you can just push a button and get your money back. You can't do that in this business. So communication is the number one thing for us. Communication and transparency. So I think that's kind of a big process that we undertake. And we have 3 people on our investor relations team that contribute to that process. So it's a lot of work to do that.
No, I can imagine. And the thing that I really like that you said a confused mind says no. And everything that you just listed there addresses that fact that you're dealing with people's money, this is their livelihood. And so if they're confused at all, they get anxiety comes up, or they'll say no if you're actually looking for their first investment. So I love that you guys do that. A lot of communication sounds like the solution if you're talking about raising capital. You've also talked a lot about building a team. I know this is a 20-minute podcast, so we can't go super deep into this, but I do want to touch on it. Team building is crucial, especially, you said 35 full-time employees. So
it's closer to 50 now since we've upped it. We hired 4 people on Monday, so
love it.
And there's been more acquisitions and stuff since we last spoke. So we're buying 2 self-storage facilities every month now.
Oh, wow.
So, yeah.
That's crazy. So let's go into in team build and building your actual business in terms of the people that you bring on into your culture, into your company. How do you go about? So we're a lot. My partnership, we're a lot behind you guys. You guys have grown pretty quickly, and that's awesome to see. I've noticed that a really difficult thing is to, 1, identify specifically what position needs to be hired, and then 2, to find a good candidate and bring them in, make them feel like they are part of the team. So what do you guys do to really address those 2 issues?
Yeah, in summary, hire slow, fire fast. So we spend and nobody's a hiring genius, but you can try to filter. So one thing that we do is we require our applicants to do 3 personality tests as a pre-screen. And we take the personality test very seriously. So we do like the Myers-Briggs and a couple other ones that assess their personalities. This does a lot of things. We don't want just anybody just shotgunning resumes out to work at our company. We want people that understand what Spartan is, who really want to work here and are passionate about real estate. And, we vet them through the process. If you don't want to spend a half an hour or 45 minutes doing our assessments, then you're probably not a good fit. Mm-hmm. And then we do a pre-screen. So we have one of our property admins do a pre-screen, 15-minute pre-screen, just make sure that we get all the administrative stuff out of the way. If they get elected for that, then they get another interview where they come in and they talk to some of our employees. They do like a panel interview. And then if they pass the panel, if I think it has to be unanimous, I'm not quite sure, then it ultimately goes to the executive review. So me and Scott will do a fit interview. So we'll actually call them in and say, hey, everybody says that you're capable of doing this job. Now we want to make sure you're good for the culture. We're keepers of the culture. So we ask very open-ended questions to get people talking about just kind of their fit and how they would get into a position. And we go through their personality assessments and we make sure that their personality assessments are fits for the role. And I'll give you an example. Chatty Cathy, who's not attention to detail on a personality assessment, is probably not a good CPA or an accountant or a bookkeeper, right? But Chatty Cathy that's open-minded and free-flowing, might be a good salesperson. So those personality, that's an extreme example, but those personality tests are a big deal. And we look at them and we look for inconsistencies and we look for fits within the organization. Because we do the baseball cards where, when they do come out of the organization, every employee gets a baseball card and we know who each other are. So we know what type of personalities that we're dealing with in the organization to help work better together as a team. So we're not just doing those assessments just to screen people out. We're doing them because we actually use them. But also, like, if somebody is unwilling to do them, it's kind of like, just go keep shotgunning your resumes to other people and waste their time, because we want people who truly understand our culture and want to be part of this team. Yep. The other thing for hiring is you got to set up an environment where people want to be. Being a Spartan is a big deal, and people love working here. And it's because we set them up for success. We are a high growth organization. We're 50 people now. We'll probably be 100 people by the end of the year. And if we have an ESOP program, so you can buy the company, you can buy into the organization. We pay for Epic passes. We have unlimited PTO policies. We have a progressive in the office policy where, we adopted this way before COVID. You don't have to be in the office on Monday and Friday. It's only Tuesday, Wednesday, Thursday. 10 to, and core hours are 10 to 2. So you just got to be in the office during that time for collaboration. We're not 100% remote. I know that's a thing and that works for some people, but we're growing way too fast to be, in our home office with kids running around and distractions and without any opportunity to collaborate with people. So we are, call it old school office people. But we also have a ton of fun when we're in the office. Yesterday, the whole team went out to Topgolf and we all had a company outing, right? We went to Moab last year and rented razors and cabins and we grow together as a team. So it's very fun. It's very fun, very flexible. But we expect people to really want to be there and be really hard workers. So, and we care about people. We really passionately care about our employees. The old saying is like, you build employees and your employees will build your company. So we put a lot of effort, going away from this like distracting real estate thing where everybody's focused on the deal. We're focused on the people and the company because that will breed everything else, So, very passionate about, taking care of people. We do every week on our sync. We have a company-wide sync call every Wednesdays. And the first thing we do is everybody in the room has to say grateful for somebody else on the team. So, we like to say, hey, I'm grateful for so-and-so for doing this or really stepping up and taking action on this. And that gives a sense of like, hey, I know we're just doing our job here, but, I appreciate what you do for us, or what we do. And we also reinforce the values of our company. We're a very values-driven company. So having kind of all that stuff put together, it not only helps attract employees, but it helps retain them, helps build a great culture, performance and hard work. And then it also, helps get the right people on the bus. And that's why we're so careful about who we hire, because we want to make sure they have that cultural fit. Because, we've built something great. We don't want to, get rid of that as we go. So.
Yep. It all starts with who you bring on the team. So you guys do a lot of due diligence up front, and then you do a ton of work to make sure that, you're providing an environment that people want to work in. So I love hearing that. We've blown through our time limit, so I do got to push us on a little bit quicker here. Before we get into the quick question round, I do just want to ask, I think you mentioned this earlier in the podcast, but it's already gone in my brain. So why self-storage? What really drew you into self-storage?
The last two recessions, it was the least foreclosed upon asset class. We looked at the performance of self-storage during good times, and it outperformed the S&P and all other REITs by 3x. Wow. So you want the best asset class during a good time and the best asset class during a bad time. I think manufactured housing and self-storage are the two things, period. Multifamily and all this other stuff. Here's the thing. There's a huge shortage of multifamily until there's not, until people can't afford to live in apartments and they go move in with their parents, or they move out and move into mobile homes. So I think when you look at recession resistant asset classes, I think storage and mobile homes are the two only asset classes out there. And we're not a big mobile home company. Just that's not our focus. Our focus is storage. But when you look at the two best performers, those are the two best performers, period. So we don't really care. We celebrate the upside and we want upside for our investors, but our focus is on what can go wrong, not what can go right. Too many people focus on, I can make 20% on this deal. It's like, yeah, but you could lose 80%, So we really want to be in asset classes that protect our downside. And the other thing about storage, easy to own, easy to evict, easy to maintain, the 3 E's. So, multifamily, we can build something in Seattle or Washington and not worry about tenant landlord laws. We can be in these great markets and not worry about eviction moratoriums or anything like that. So we like that. It's the most automated thing you can be in. Most of our facilities, all of our facilities are highly automated. And then, so it's ease of operations and then easy to build. Slab on grade foundation, metal walls, there's no cabinets, toilets, appliances, paint, trim, fixtures, anything like that. There's no tenant turnover, maintenance items, it's concrete slabs and metal walls typically. So
perfect.
So we really like that, less variability in CapEx.
Yep. And we're in mobile home parks as well. You knew this. And so, preaching to the choir here, I totally love your asset class and it sounds like it's going well for you guys. Before I do want to ask one more question, I'm just going to blow through our 20-minute mark here. Because I focus a lot on the marketing and bringing in leads for our group. And sure. I know that you do as well. So it would be remiss of me if I didn't ask, what are the best methods that you guys use to generate new leads, new self-storage leads for your company?
Oh, so for buying deals, not investors.
For buying deals, yep.
Yeah, okay. So for buying deals, you have to have a reputation. I know that everybody says this, but really, like when you talk to a broker and you're invested final on a purchase and there's 7 offers, why are they going to pick you? We have 100% contract to close ratio, meaning that anything we've ever put under contract, we've bought.
Oh, wow.
Right? Big companies out there, they just shotgun off, a gazillion offers and they close on 30% of them and they get a reputation for not being a closer, right? So I would say that one of the biggest things you can do is build a reputation. If you can solve the money problem and the finance problem, right? Because every time you buy a park, what are you going to run into? You're going to run into financing problems. That's the number one killer of all deals. You can't, the bank loan pulls out, or the hard money lender didn't do this, or they won't lend on this because it's got a lagoon, or it's, whatever, right? So if you can solve the financing problem, that will increase your contract to close ratio, thereby increasing your reputation. So I think if you can take some variability out of, get your reputation solid. I think that is that's the broker relationship. Because, everybody says, yeah, go out and network with brokers. Okay, yeah, that works. You can go out, you can find 300, 400 brokers in the space, and you can get them to send you, get on their list, get on their distributions, and be on their call for offers and, and stuff like that. But really, if you start performing for brokers, they're going to say, they're going to get a lead. And before they list it on the, the thing, they're going to call you and they're going to say, hey, I know that Gabe and crew are the guys that get it done. And they know, hey, you want to take a first look. And if you drop everything you're doing and take a look and have a way to analyze it and make a decision and make a commitment, and you have that reputation to close, the broker, remember, they're representing the seller as well. So they're going to say, hey, seller, like, I got a group and they just buy everything I give them if they like it. And they said they like it. So you want to go under contract, or, and the seller might say, no, let it go to market. And the first day we put it under contract, right? That's one way. Letters, coming up with your own system, let's find all the dirt zone manufactured housing, or let's find all owners over, age 80 that, are probably going to sell, that, are in a trust, whatever it might be, right? So, there's off-market, non-market. I could sit here and say, oh, all the on-market deals suck. I could say, no, there's deals that are on the market, right? There's always deals to be had. So, yep. And then, one thing I encourage you to do is you may look at some deals and think you can't buy them, and you just haven't gotten creative enough. So, like, the way you set up your business, the way you fee model your assets and your acquisitions, take a close look at how people are buying 5.5 cap deals, 6 cap deals, 5 cap deals, right? Don't chase the 10 caps because they're 10 caps, because they may be 10 cap, 15 pad parks, right? And that feels good, but that's a lot of work for not a lot of return.
Yep.
right? You maybe go after a 6 cap that's bigger or a 5 cap that's bigger. There's a reason why the REITs are placing these big dollars into the bigger parks and not the smaller ones,
Yep.
right? So, your acquisition strategy might help get you deal flow, might get you more leads and acquisitions. So I found that the bigger the deal is for us, the better it is. But the bigger the deal it is, the harder it is to get because there's more money chasing it.
Yep.
So you just got to figure out what you want to do, what your investment thesis is, and that will really help increase your deal flow.
Perfect. I love it. All right. On that note, I'm going to push us into the final round. This is the quick question round. I actually didn't mention this to you before we got on the podcast, but it's no problem. This is just basically a quick round. I'm going to ask you quick questions, give me quick answers in response, and we'll call it good. Always starts out with books because I'm a big bookie. So give me 2 book recommendations, 1 for real estate and 1 for general life wisdom.
Scaling Up is a book that I'm reading now. So if you want to talk about scaling a company, that's really good for wisdom, I guess. For real estate, Scaling Up and Traction by Wickman. Traction is a great one. If when you're thinking about systems and things like that. One more company one. I'll give you 3, and then that'll be good. No Rules, the Netflix story is another good one. So those are 3 really good business books that I'd recommend. Real estate, I really liked the ABCs of real estate investing. I read that. It was like my first book that I read for for getting to know, kind of like NOI underwriting, some processes for like getting deals in new markets and stuff like that. I think that was you get the core basics in that book.
Perfect. I love it.
Yep.
All right, moving on. This one is for your younger self. So if you could go back to the Ryan who was a pilot, who had no idea about real estate, still in the DC area, hadn't met your partner yet, go to him, look him in the eye, give him 1 piece of advice moving forward.
Start raising money faster. Yeah, here's the thing, right? I always tell this quick analogy. You have $1 million in your bank account. Just pretend like you got $1 million in your bank account, and you find a deal that costs $1 million to do. And there's a profit of $1 million. So you're going to put in $1 million, you're going to make $1 million, and it's going to take a year. Let's just say you find this deal, right? And you think to yourself, well, I'm just going to do this deal myself. Why would I share this deal with anybody else? Right? That doesn't make any sense. I'm just going to make 100% return on my money and do my own deal. Why do I need investors? Right? Well, let me tell you why. Because you can go out and raise $1 million from investors to do that deal. And you can say to your investor, hey, I'll give you 20%. So I'll give $200,000 to you to do that. A lot of investors would say that's a really good deal. 20% return on my money in a year. Not bad. You still make $800,000. They make $200,000. Life is good. Right? And then you get their money back. Right? Now you can take your $1 million and you can go build a company. You can go hire 4 acquisitions people and give them a salary. You can go hire an HR person, a bookkeeper, a construction manager, all these other things, right? And now instead of doing 1 deal like that a year, now you're doing 20 deals like that a year. So instead of making 800,000, you're making 160, 20 times.
Whatever that math is, yeah.
Right. So, 1.16 million, right? Or whatever it would be, right? So when you think about raising money, if you can raise money and get investors, it's a game changer. And the only advice I would give is, and I wouldn't need to give this to myself because I think I do a good job of it, but it's not for everybody. When you screw around with your own money and you lose it, it's not a big deal. When you take somebody else's money and you lose it, that's a big deal. So we've never lost anybody's money. We've only been profitable to date. But having said that, it is a different responsibility when you do that. But the best companies in the world, Microsoft, Amazon, they all have shareholders, stockholders. They all, they don't have all their own money in the deal, and that's how they get scale. Is they get VCs, they get investors, right? So I would go back and say, do this faster and focus on this sooner, and so that way you can truly use the capital that you have to start building your company. So we did that eventually, but it just took a little longer. So I would collapse that timeline a little bit.
Perfect. Raise capital. I love it. All right. And you've already kind of mentioned this one a little bit, but next question is about your superhero strength. We all have strengths. You already know this from your personality tests. What is your Superman strength? What are you really good at?
Grit. So I don't quit.
I love it.
I have the tenacity to do anything. I think I could say, relationship building is one, just kind of, meeting people, getting to know, like, trust. But I think grit is probably the biggest one. I've gone through many different challenging, just in this past year, I was able to score a 92% LTC ground up, $12.7 million loan. It's like, well, wait, I thought, you had to be 70% or whatever, but there's a lot of things you can do. And if you don't quit, you don't give up. That's a big one. I've gone through some of the, and I do this with a team, but, I've led the charge on, entitling very difficult projects. And it's like a never quit mentality. And I think that is really, the building blocks to, what is my superhero strength or whatever you called it. So, yeah.
Perfect. No, grit is definitely important, especially in real estate, because things always go wrong. It is a guaranteed. If you're in real estate, things are going to go wrong. That is for sure. All right, moving on to the next one. And this is about location. So the United States is a huge place. You guys are investing all over the U.S. What area are you most excited about?
I'm excited about the areas that have population, income, and job growth. And if you go to our website, Spartan-investors.com, we have Spartan map, and we've outlined all those locations, 150 markets that we look in the United States. I love the Pacific Northwest. I think some of the richest equity deals, development deals you can do are right here in Washington. There is a ton of money to be made. We have one of the best economies in the country. We have people living here. We have, we've got the biggest companies. We have the two richest people in the world that live here. I think and there's just trickle down from that. I think that, this is a great market. Pacific Northwest is a great market. We're also in Texas. There's a lot of great things about Texas. There's, tax incentives, there's growth there, there's employment. So I think Texas is a good market as well. And we're also in parts of Arkansas. We're in Northwest Arkansas. That's a great market. I mean, little did I know before we started looking at a deal there in Northwest Arkansas, you've got 5 Fortune 500 companies in Bentonville, Arkansas.
Oh, wow.
Yeah, Walmart, Tyson Foods, and J.B. Hunt. 5 Fortune 500 companies right there in a tiny little market. And you never really think about it. And then you do the demos and you're like, holy cow, this is a good market. There's 2% solid job growth there. So, I would say, and then we're south of Atlanta too, and there's, that's a good market. So we just look for markets where there's, 2+% year over year population growth, income growth, job growth, and, net migration, positive migration of people. We don't go to markets where there's, we're not, in Ohio, we don't look anywhere in Ohio except Columbus, because Columbus is the only market that's actually growing. Cleveland's dying, Toledo's dying, Cincinnati's kind of flat, right? So we look in markets that have pure population, net migration growth. Like Detroit is not growing. I'm sorry. I'm from there. I can talk about it. It's not growing. It's dying. It's going down in population. There's great things happening there, but it's, year over year, there's a decline in population.
Yep.
So yeah.
All right. Nope. Makes sense. And a lot of PNW pride here. So I will not argue with you on that one. Going into the last question, and this one is for the listeners. You've given us a lot of good advice about how to raise capital, how to build a team, how to build a real business. So I'm sure people want to reach out, say hi. What is the best way for them to do that?
Yeah, our website is Spartan-investors.com, or my email is Ryan, RYAN, at Spartan-investors.com.
All right, perfect. And for everybody listening and watching, I will put that URL in the show notes. So if you see the little more in the description, click that bad boy. It'll pull down the full description. And in there, you can see Ryan's link. Click there, click through that, and say hi. So Ryan, yeah, thank you again for hopping on. It's been a pleasure having you here.
Yeah, thanks, Gabe. Appreciate the time.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason that we do this, so we appreciate having you here. As always, if you have any questions, reach out to me at therealestateinvestingclub.com. Other than that, I hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode and were able to pull some actionable advice that you can go home with and apply to your own investing business. Before you go, I have a gift for you. If you're a new investor looking to get started or an established investor looking to take your business to the next level, I've created an ebook just for you available on the website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find a deal that's actually a deal, how to finance that deal with little to no money down, and how to exit a deal for maximum value. And if you get the ebook today, I'm going to bury you in bonuses, 7 of them to be exact. First, you'll get the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating real wealth in real estate. Then you'll get the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools and systems and even the vendors we use to grow our business. After that, you will get the top 100 best performing keywords pack, which will give you the exact keywords we use to target leads online and generate leads without having to lift a finger. Next, you'll get the contracts bundle for wholesaling and renting real estate, which will give you access to all of the contracts we use in the field to execute all types of transactions. After that, you'll get the Investor's Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automagically from those calculations. Next up, we'll give you the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And finally, you will get the Wholesaler's Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. I know that is a ton of things to say. I'm glad you were able to stick with it. So you'll get both the ebook and all of those 7 free bonuses when you download the ebook today. All we charge is the admin cost to run the show. So if you are interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page and take advantage of that deal. With that housekeeping item covered, I hope you have an absolutely fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.